Yeah.
दिखा रहा है अभी मीटिंग इज नाउ स्ट्रीमिंग लाइव.
हाँ, एक बार चेक कर लेना.
Viral, you are posting in all groups?
Yes, I am posting in all groups now. Yeah.
Kılma.
Viral will start.
Yes, we start. Yes.
Yeah. A very good evening to all of you. Respected Krishnan sir, seniors, colleagues and friends. I, CA Jigar Atilal Gogri, President, on behalf of CVOCA Association, welcome you all for today's webinar on cards and payments, compounding wealth machines. CVO Chartered and Cost Accountants Association is a 5-decade-old non-profit organization having professional excellence as its motto. It has more than 1,800 chartered accountants, company secretaries, and cost accountants belonging to Kachi Visa Oswal community as its members. The association has been one of the highly respected and longest serving professional non-profit organization of CVOCA community, focusing on dissemination of knowledge in the field of accountancy, audit, taxation laws, corporate laws, and business consultancy. CVOCA carries out various activities for its members, students, and general public at large. CVOCA Association has been regularly organizing programs on capital market for general public. After a successful session on pharma sector, association thought of arranging webinar in the space where still a lot of potential is left out. One such sector is credit cards and payments. Credit card companies make their bulk of their money from three things: interest, fees charged to cardholders, and transaction fees paid by business that accept credit cards. SBI Credit Card is the only listed company in the credit card space. Most of the other card companies are held as subsidiaries of the banks holding them. In near future, there is a chance of banks like ICICI Bank, HDFC Bank, and Citibank to list their card businesses. There are many potential multi-baggers in the unlisted space too. To evaluate this business model and to identify winners, we have with us Mr. Krishnan. Without taking much of his time, I request CA Keyur Furia to please introduce our today's speaker. Thank you. Keyur, over to you.
Good evening, friends. A warm welcome to all of you at our CVO Chartered Accountant and Cost Accountant Association meeting on BFSI sector. It is a great pleasure that I got an opportunity to introduce our honorable speaker. Now, I have a question in mind, same with you. Do you know how these banking and financial companies make money from the payments, card payment, and other transaction? You can think, raise your hand if you have different business models or in mind anything such which can help us to categorize these business companies. I think now let me go to the in some inside secrets from someone who is a master itself and a trust benchmarking advisor and who is having a best practice and is consulting to the board of directors at various leading bank directors also. I request everyone to welcome Mr. Krishnan ASV. He is a senior vice president at HDFC Securities. He has a wide experience of over 15 years over the in the banking and financial insurance sector. He has been continuously working in this sector and
I think Q's connection is.
Am I audible?
Yes, yes.
Okay, sorry. And he has also worked at a couple of years with the SSL and got a massive recognition. Krishnan sir is a sell side analyst with a huge experience and currently working in HDFC Security. Prior to that, he has also over the 10 years. Now, not much taking the time also, he is also postgraduate diploma from IMB Bangalore in a 2006. Apart from this, he also loves to play cricket and have a great pleasure in chess and other work also. In the next 60 minutes, we will also understand and learn from the sir how to identify, evaluate such companies, and we as a leader of the community and working across the various sectors. So and we can also expect to earn more in the coming times. Let me get back to the Jigar bhai. Please welcome Mr. Krishnan. Thank you, sir.
Jigar, you are mute.
As a token of our love and affection, I'll request CA Amit Chheda to please offer e-certificate to our today's speaker, Mr. Krishnan. Yeah, Amit.
Thank you, Jigar. Sir, in the digital era, it is difficult now to personally meet and all that. So on our association's behalf, we would like to present you a e-certificate. This will follow in a physical format also, but right now, please accept our sincerity on our e platform. I think Viral is sharing the screen, the digital certificate. So
Is it visible?
No, I think it's buffering. Our associations behalf, we would like to present you a e-certificate. This will follow in a physical format also, but right now, please accept our sincerity on our platform. I think Viral is sharing the screen, the digital certificate. So,
1 second. Is it visible?
no, e-certificate. This will follow in a physical format also, but right now, please accept our sincerity on our platform. I think Viral is sharing the screen, the digital certificate.
Viral,
So,
there is an echo. I think you can log off the YouTube link.
no,
I don't know. It is not playing at my end.
Okay.
e-certificate. This will follow in a physical format also, but right now, please accept our sincerity on our platform. I think Viral is sharing the screen. Yeah, I think it is going in some loop or something.
Yeah.
Yeah, it is my end. It is going some loop or something.
So, yeah, Mr. Krishnan, you can start the session now. Viral, I request you to mute everyone except Mr. Krishnan.
Yes, yes.
So there is no echo. Yeah.
Yes, yes. Yes, sir, you can start.
Okay. First and foremost, many thanks to the CVOCA for inviting me on behalf of HDFC Securities for this session. Um, we are extremely grateful for this opportunity. I want to thank CA Jigar and the rest of his team at the CVOCA for the opportunity. Right. Also want to take the opportunity to welcome on board a few of my colleagues who are also a part of the co-presenting team, Darpin Shah and Puneet. They are also there among the participants around to present our case on cards and payments. This is a very, very interesting space. You might wonder why somebody in the financials sector leaves aside everything else and wants to talk about cards and payments. Largely, the reason for that is this is one of the most flamboyant segments within the BFSI sector. I think everything in the BFSI world actually begins at the payments. Just a preamble in terms of what territory I want to probably cover over the next 30-40 minutes. Before I begin the screen share, I'll just take you through very quickly what kind of agenda we have in mind. I hope you're all able to see my screen. Just give me a thumbs up, CA Jigar, in case you're able to. Yeah. The reason why I picked this topic, cards and payments, apart from the fact that this was something that was of interest to us within HDFC Securities as well. Outside of that, I thought this was also a very good time to bring investor awareness and investor attention to a space which is picking up steam. A lot of CAs who are currently watching this session on YouTube, or you get to watch this on YouTube later on, you're looking at either listed banks today or a lot of unlisted players within the payment space. A lot of these unlisted payment firms are actually looking to raise equity, and it's very much possible that you in the CA community are probably coming across some of these names. So I thought this was a very good time to just raise the awareness levels, raise the decibel levels around some of these names, and give you a perspective as to what you should look at when you're evaluating investment opportunities in this space. there is no efficient way of doing a Q&A here in terms of me being able to make it more interactive for you. But I just want you to think about your world in the payments space today. I think on a daily basis in the Indian retail space, so a normal individual, so all of us individuals put together in India, we are doing roughly about 50,000 crores worth of transactions every day. That's 50,000 crores worth of transactions. Roughly about 1/4 of this, so roughly anywhere between 10 to 12,000 crores of just UPI transactions in a day that we are doing. Right? That's how enormous the value of transactions is. Right? So just let those numbers sink in and you get to understand why is this space so hot. So briefly, just going through what kind of agenda we will have for this session. The first thing we are going to be looking at is obviously why is this such an exciting space? Why is it so flamboyant, such a glam space within the financial sector? Number one. Then we look at the various types of business models there are, just a little bit of an understanding of what business models there are within the payment space. Third, how do these businesses make money? And fourthly, what we will talk about is very, very important for the audience, which is how do you make money while the payment firms make their own money as well. So what is in it for you? What kind of frameworks, investment frameworks can you look at? What are the right questions to ask? This is going to be more a discussion stage. There aren't going to be too many leading slides in terms of us leading you into any investment recommendation there. There will be one illustrative example, as CA Jigar mentioned, there is just one listed entity in the card space today, that's SBI Cards. We will be using that as an illustrative example in the later part of this presentation. So without taking further ado, let me take you to the first point on why is the payment space such a glamorous part of the financials universe. Just a very quick one exhibit view of why payments has been so important. I think it's high on engagement. So as I said, you're doing roughly 50,000 crores worth of just retail consumer level transactions every day in India. We are doing roughly about 10, 12,000 crores worth of UPI transactions in a day, right? The entire country put together. That's a very large number, right? And that's where the entire financial universe begins. Everything you want to do thereafter, which is in terms of making money in the financials universe, is actually topped up on the payments level. So you do payments and then you start building other building blocks. You do lending, you do edtech, you do insurance, etc., etc. So just a very brief snapshot of what we have in the payment space today. So you just look at payments as a vertical and you see that's the maximum number of fintechs. That's where most of the profitable fintechs exist as well, right? It is a fairly concentrated market on one side, and when we do discuss as to what are the business models available here, you will get a very fair share of understanding as to what I'm talking about when I mean the consolidated market and a fragmented market. So there is at least one side which is extremely consolidated, the other side is actually very fragmented. And because of that, there is enough and more space. It's a very, very scalable. As an investor, that's the first thing that you tend to look at. How large is the canvas? For a lot of you logging in on YouTube who are also familiar with India, familiar with cricket as a sport, I might use a few analogies there. Virat Kohli is Virat Kohli because he plays for India. If he was playing for Zimbabwe, not too many of us will actually be aware of it. And so the size of the addressable market becomes very, very important, very significant when it comes to evaluating investment opportunities. And payments, as I said, is a very large canvas, right? That's the reason why it is attracting so much private equity money, so much private equity interest. And that is one of the reasons why everything actually centered around payments, and then you start constructing other building blocks. So this is the reason why payments is the I guess the glam boy or the glam quotient within the financials universe. Now, what are the business models in the payment space? I mean, I think it's fairly reasonable to understand why payments are important. It's now important to understand what types of business models exist within the payments universe. There are essentially two sides to the payments universe. There is an issuing side, there is an acquiring side. This slide is essentially a snapshot of those two sides of the same coin, but you need both for the industry to function, for the ecosystem to actually work very smoothly. The issuing side is consumer facing. That's the one that you and I face, right? The acquiring side is what the businesses face. The issuing side is dominated by banks. There is a fair amount of co-branded activity level that has now picked up. The entry barriers are fairly high. There are licenses, so you need a banking license. You need an issuing license to be an issuer. This is largely in the form of credit cards, right? I mean, cards that are issued. So that's the issuing side. There are revenue streams both on fee income as well as float. The barriers to scale are relatively low. Once you get into the industry, your ability to scale is completely in your control. The key players here are obviously the large banks, SBI Cards, which is the one listed entity we have, and American Express, and a few other foreign banks who were meaningful players at one point of time. On the other side of the coin is the acquiring side. This is the merchant side. This is largely dominated by fintechs. There is a lot of fintech activity which is happening on the acquiring side. So you have the likes of Paytm, you have the likes of Amazon Pay, Google Pay. Facebook has had a very recent partnership with Reliance. They have invested in Reliance Geo Platforms. Now that we believe is a precursor to what Facebook wants to achieve with WhatsApp Pay with merchants. So, and then you have the likes of Cash Free, Razor Pay, Phone Pay, and so on. So these are all merchant acquirers. So they represent the vendors. The entry barriers are low because, as I said, this is a fragmented side of the universe, of the payments universe. There are again multiple revenue streams here, which is both again float and fee based. Banks are also players here, but I think gradually you will find that there is a far better maturity level that fintechs bring to the table, which probably banks lack. Barriers to scale. So entry barriers are relatively lower, but barriers to scale are relatively high because there are 3 or 4 very large players. Generally, bulk of the transactions are dominated by them. So, for instance, UPI is dominated by 80% of UPI transactions are done on 3 platforms. And the key players are broadly there and thereabouts that you see in this list. So just different ways to skin the cat here in terms of getting a single window view of flow of funds, whether it's the customer side or whether it's the merchant side. Between these two sides, it's very easy to understand why the issuing side is generally like the captain of, say, an IPL franchise, right? You see the issuing side day in and day out in front of you. The acquiring side is more like behind the scenes. So they are more like a coach of the RCB team, right? You don't see them very often, but you do look at a Virat Kohli very often, almost every time he plays. So the issuing side is again the glam quotient, raising the glam quotient. Their acquiring side is generally behind the scenes. I'm now going to spend some time on just the issuing side. This is not going to be about credit cards specifically. So this is the Indian credit card industry, and you can see why it has sparked a lot of interest, why there was so much excitement around SBI Cards as the loan issuer that got listed last March 2020. So the top left and the top right are essentially telling you about the scale of business, right? So this is a sector which has been seeing rapid volume and value growth. Right? Not only are banks back to issuing credit cards, they are also getting people to spend. Right? And if the credit card remains in your wallet, it's of no use to a bank or any issuer. Right? If an ICICI bank cannot get you to spend money, then ICICI Bank is actually not making a profitable investment in the cards business. It's important to give it to people who are actually, it's important to card people who are actually going to spend. And increasingly, the Indian industry is moving towards that level. It's moving towards a level where there is a lot of seriousness in the business. There are nearly 57 million credit cards in force right now. And they have been growing at about 20s to mid 20s. This used to be the leading growth engine. This and unsecured loans used to be the leading growth engine for nearly 3-4 years until COVID hit us earlier this year. Having said that, spends have not frozen at all. You saw that just for a brief time between March and April, when the country was under lockdown because of the pandemic, spends did collapse a bit, but gradually spends have picked up again. In fact, if anything, the credit cards have taken over the spends from other categories because there is no way that you can spend cash. Most shops were not open. A lot of purchases happened online. So it was e-commerce that was driving a lot of business. And obviously, credit cards were one very convenient way to pay when you do e-commerce. Now, so the top two charts were essentially about just showing you the growth in volume and value. But it's also translating into receivables for banks, right, for issuers. And this is very important. I think as you will see in the rest of the presentation, when we do discuss the economics of the card issuers, it's important to realize card companies make money from different streams. But if they did not make interest income, then there is a problem. I realize that among the many of you who are watching us on YouTube, the many of you who are probably on Zoom as well, a lot of you, when you use credit cards, are probably transactors. Right? If you are transactors, which means you spend 10,000 rupees this month, and by the time the due date comes, you actually pay off the entire 10,000 bucks to the bank on the due date, then you are not a very good customer for the bank. You're not a very profitable customer for the bank. You are good for the headlines, but you're not very good for the bottom line, right? The good thing about the industry is there is a fair amount of receivable growth. So which means there are people who are now beginning to revolve credit. There is a healthy mix of non-transactors within the overall credit card users. And a lot of that has helped get the industry to a scale where you see people making about 5-6% ROE. There's one listed entity, as I said, so that's the only comparable number we have. But when you talk to most of the banks in the industry, you find that most banks, if they are looking to build or if they are serious about the credit cards business, it is because it's a high ROA business. For every 100 rupees that you invest, you're basically making about $5 every year, right? And in a leveraged business, there are ways to make that count, right? That's almost like a 30% ROE business. Now, put that in context of what most banks are actually reporting. Most banks, even the well-run banks in the country today, and I represent one of them, are generally between 15 to 18% ROE. And this is a business which is going to make nothing short of, say, 25-30% ROE. And yet, despite all this growth that you have seen, what you see in the top left is where we are. We are still, the credit card industry is still minuscule. It's just 1% of the overall credit, 4% of total retail credit. Dominated by a few players. I think the top 6 players make up 80%, 82%. Just in terms of the receivables as a percentage of the loan book, again, you see that number is about 5% or less than 5%. In most of the banks' cases, it's less than 5%. There are just 2 banks that are above that number. this is just putting in context where India is as to why payments has gotten so much attractive. Why is it attracting so much private equity money? That's because where India is. Extremely high on population, but extremely low on penetration when it comes to credit cards. And all of these four exhibits on this slide are essentially telling you low penetration. They are screaming low penetration. So no matter which metric you tend to look at, we are significantly inferior as a country compared to a lot of these economies when it comes to the penetration of credit cards as an instrument. It's not necessary we will get to where the other economies are, right? But even if we get halfway there, that's what is getting those investments, right? You can imagine if we get to 10% penetration credit cards per capita and it's a serious business, you can imagine the kind of money that these issuers and merchant acquirers are going to make. And then you can imagine what you as a shareholder, as an investor are going to make. That's the reason why all this money is chasing the payment space in India today. That's what is exciting on it. Now, purely in terms of spends as a percentage of GDP, again, no matter where we are at the end of FY19, FY20, I think these numbers are extremely minuscule. You saw where India was as a percentage of GDP. You look at the top right, we were at about 3% at a point in time. Now, and this is exactly what you see here. Maybe after COVID, this number would have gone up. We had just seen the GDP numbers released for September yesterday. But that's a deflated GDP. So you should understand, adjusted for normalization, I think we are still at about 3.5% as far as credit card spends are concerned. And there's a long way to go when you look at a lot of other economies around us. Just to give you a perspective on how large this is in the rest of the world. The largest credit card market in the world is the US credit cards business. That's $870 billion. That's $870 billion worth of card issuance. Now, cross cycle, what you look at this is because of the time series and because of how mature a market the US is, you basically look at this business and you say, look at the bottom two charts. You're saying that in the worst of times, like COVID was expected to be one of the worst times in terms of delinquency levels for the sector. It hasn't played out that way because we had a moratorium. Right? But if you had no security net, if you had no safety net available for banks and other issuers, chances are at the worst of times you will see very high delinquency levels in this business because it is unsecured. People, the banks pay first and then collect from their customers, and hence it's important to realize that this remains high risk, high reward business. And because of this high risk, you should never get into this business for an 18% ROE. This is not supposed to be making a 15%, 18% ROE. You can never build this business that way. You have to build this business for being a 25, 30% ROE. There is high cross-cycle profitability. That's the reason why there are so many banks. As I said, this is dominated by banks on the credit card side. The issuing side is dominated by banks. They build this business for that cross-cycle profitability being what it is. There will be one odd year where, because it is unsecured, because there has been a pandemic, because there has been some income shock, you will face high losses. But over a cycle, you will make significantly more money in this asset class than you will make in a lot of other asset classes as a bank. So it's almost inevitable that every bank should have at least one or two such high ROA businesses. If you go to two, I think this remains the second best. Other than unsecured loans, I think the credit cards business is probably the second best. But because the barriers of entry are so high, not everybody can get there. I'm just going to briefly touch upon one slide on the merchant acquisition front as to why that has been so exciting. This is all until COVID hit us in March 2020. So you look at the left, which is essentially just the UPI payments, right? And I'm sure a lot of your transactions have started migrating from you having to go with a mask to the supermarket has now become, even there it becomes put contactless. You either pay UPI or you do a QR code. So the merchant side is more the QR code, where you can just look at the numbers. Almost everybody is on an acquisition spree right now. Everybody wants customers. Everybody wants merchants, right? So Paytm ने जाके 16 million merchant acquire किए just on the QR code. And this QR code is nothing but what you see on a roadside thela to leke, what you see at Chroma, what you see at the merchants, what you see at the supermarkets. So obviously, purely the acquisition side has also seen a lot of innovation. And this is where, as I said, most of the fintechs actually play in this space. And you're beginning to see the changes in terms of what these guys bring to the table, in terms of the POS terminals, in terms of mobile POS. And I was told by a very dear friend of mine, Bhavya from Mire Investment Banking, who happens to be an expert when it comes to the fintech space. I learned a lot from him. And if you're around listening to us on YouTube, this is a shout out to you, Bhavya. But you know, we pick up a lot of things around the fact that there is something called a soft POS, which has now come in, which is even beyond mobile POS. So these are, I mean, contactless payment modes. Everybody wants to go contactless. This acquisition is what is happening there, right? There is no point giving a consumer like CA Jigar or CA Viral a card if there aren't merchants willing to accept these cards. So the acceptance infrastructure is equally important. The RBI has done a fair bit, but there is a lot more work to do. That's where the fintechs step in, because they are innovative, they are creative, they are tech first, and so they are able to actually do a lot more. They are actually able to build a lot more traction when it comes to the merchant side of acquisition. Now we are going to be talking about one illustrative example. As I said, we are making no recommendations here. Darpin and I are happy to take any queries on the sector, but we also happen to be regulated by SEBI norms. We are making no recommendations in these. So there's no buy, no sell, no recommendation coming out. This is largely going to be factual. This is going to be telling you a lot about understanding SBI cards. If you were an if you are an investor already, put nothing like it. If you are looking to evaluate SBI cards, what are the kind of things you should watch out for? What are the kind of things you need answers to be able to make that investment? So very quick introduction on SBI cards. Pre-IPO, this was 26% owned by a private equity firm, Carlyle. The post-IPO, SBI, the parent bank's stake in SBI Cards has come off to 69%. The remaining is all owned by others. They have roughly about 20% market share in spends, as we talk about. They are the second largest credit card issuer after HDFC Bank. There are three reasons that actually differentiate, or three very differentiated facts about SBI Cards. Number one, they are probably the only pure play credit card issuer in the country other than Bob Cards. And Bob Cards is actually playing on both sides, the issuing side as well as the acquisition side. SBI Cards is the only listed entity. And you may not see, I mean, despite what CA Jigar said, I believe that banks will find it very hard to disassemble just the credit card business into a separate vertical and list it. I think it is one of the biggest profitable segments for a bank. It's very unlikely that banks will reveal a lot more data around the cards business than what they do today. It is very difficult to get data on the cards business. And so if you were making money, a lot of very, very high ROA and ROE on a business, it's inevitable that you will try to protect as much data, as much privacy around what you do, what strategies you are employing in that business. So it may not be straightforward to see other card issuers coming into play. Having said that, SBI Cards, given the kind of valuation that it commands today, Because it is such an exciting space, as I said, there could always be other pulls and pressures that get some of these card issuers into the market. So if they do, nothing like it. I think as an investor, you can have a ball looking at some of these credit card issuers. At this point of time, SBI Card does command a scarcity premium, largely because it's going to be one of a kind. The second thing that differentiates SBI Cards is the fact that they are the biggest open market sourcing issuer in India. What do I mean by open market? There are largely two channels to source customers. There is again the banca channel, which is what most banks use. They use their customer base. And then there is the open market channel. So any of you who have been to an airport, and that's a different world. We are talking about a pre-COVID world here. When you did go to airports, you saw the Amex counters, the SBI Cards counters, and there were always people willing to market the SBI Cards card to you, the Amex card to you. That's open market. Now, SBI Cards is the largest open market acquirer. So they acquire customers through SBI. They also acquire customers through other channels. The other channels, they are the largest. That's the second differentiator. And the third, SBI Cards has a predominant portfolio of paid cards, fee-based cards. They don't give away free cards. Right? Free card, as I said, sits idle in your wallet, hardly ever used. It never makes money for the issuer. Instead, SBI Cards actually charges you money for a card. They say, okay, fine, sir, please take XYZ card of ours, pay us 500 rupees every year. Now, because you are paying 500 rupees every year, chances are you are going to use it. So the dormancy levels are very low. The latency levels are very low. It's like saying that if you're paying $9.99 for Netflix or Amazon Prime, you better use it, right? You're not going to be paying an annual subscription fee to Netflix and not watching Netflix. So that's what most of these card issuers are now beginning to do. They do try to tell customers that, look, this is the fee, this is a joining fee. But they also try to offset that by saying, if you spend 1.5 lakhs on this card, I will offset this fee. It becomes a free card for you. You don't need to pay me. Because on that 1.5 lakh rupees of spend, there are other transaction fees that I make. Right? So sometimes as a legal entity, as a corporate entity, you want to see what is the best way to make sure they use it. And once they start using it very actively, I can probably fade away the joining fees. So those are the three big differentiators on SBI Cards. Number one, they're probably the only one that will get listed. Number two, they are the largest open market sourcing issuer. And number three, they have a very, very large portfolio of paid cards. The rest of the charts that you see from here on will be largely relevant to SBI Cards. I'm not going to go through every slide, every exhibit, but I'm just going to give you a very big picture view on where the key strengths of SBI Cards are coming from. Very high growth trajectory in the last 4 years. So starting 2017, I think there has been a very different degree at which SBI Cards has been operating, both in terms of pace of growth as well as the profitability. Right? So this slide, all 4 exhibits are largely around growth. You should discount H1 FY21. So that's April to September 2020 is an outlier. And we all know why. Right? The effects of the pandemic have been visible both in terms of people being able to sell a card as well as people being able to consume using that card. So do take the numbers of 1H FY21 with a pinch of salt. You need to wait and see where that number normalizes. But other than that, outside of that, this is a very, very exciting space that SBI Cards has created a niche for yourselves. So for themselves, they have carved out a space, a territory for themselves, and that's been very interesting. High on growth, high on profitability. That's a very sweet spot. Everybody will want to get there. If you tell my grandmother this is an asset class which is high growth, high ROA, you and your grandmother will want to get into that business as well. You don't need to look at all the numbers. Just look at the numbers which are in the dotted rectangle, the top tab is all about volumes. 18% market share on volumes, about a 20% market share when it comes to spends. That's SBI Cards for you. And that's a good mix to have. So which means there are less number of cards that are staying idle. There are less number of customers that are staying latent and dormant. Now you compare that, for instance, with say something like an ICICI Bank today or an Axis Bank. An Axis Bank, if you look at the top tab on number of cards, they have a 16% market share. But when it comes to the spend, they are much lower. They are at about 14%. Axis Bank is even more acute. It's about 12% on volumes, but less than 9% when it comes to value spends. And that's not a very sweet spot to be in. You actually want to raise the spend market share over a period of time. If I was Axis Bank, I will look at what I can do to get my customer to use my card a lot more frequently, because otherwise I'm actually not making very good money. We don't know what money Axis Bank makes on the cards business. That's not a public disclosure in the public domain. But I'm saying if I was Axis Bank looking at these numbers, I will want to know what can I do. I'll want my credit card head to tell me what can they do to get my customer to use the card more frequently so that the spends are high. Monthly spends per card, we are roughly spending as a country, we spend about 12,000 rupees per month per card. Right now, the ones who are watching us on YouTube, the ones who are on the Zoom session, you can do that math for yourself, right? Whether you're above that average or below that average. But on an average, the Indian consumer is spending about 10,000 to 12,000 bucks per month per card. You may have a 50,000 rupees spend in a month, but you might be using one card out of 5. Right? That 50,000 is then divided by 5 because 5 cards are in force. Whether you're using the other 4 or not doesn't matter. So the denominator is cards in force. As I said, we are at about 57 million for the industry now. The average ticket size will be very interesting. This is a tab that I will come to later when we are comparing what is happening with other modes of digital payments. Now, what has happened here? Now, if you look at the top tab here, right, the average number of transactions per month, and then you juxtapose with the bottom tab on slide 17. Slide 17, the bottom tab is all about average ticket size. You're spending roughly 3,000 rupees every time you take out that card from your wallet. Roma में जाते हैं तो वो शायद 20,000 होता है, right? But when you do the normal Netflix transaction, also now you are picking out your credit card. You do an Uber load through Paytm, that's also a credit card. Right? So general transaction ticket size has not gone anywhere in 8-10 years. Starting FY12 until FY21, that number has largely remained 3,500, 3 to 3,500. Right? Your normal average spend every time you take your credit card has not gone anywhere. But what has changed is what you see on slide 18 top tab. Earlier, you used to do 1 transaction per month. Now you're doing close to 3, 3.5, 4. Right? That's how many times you're taking out the card from your wallet. And that's interesting. That's what is getting us that growth on the same number of cards, because you're using it so much more frequently. The issuers are now able to see a lot more traction, a lot more activity. This is again going to be just about SBI Cards. As I said, there are different ways to skin the cat and slice and dice these things from a type of user perspective to sourcing channel. We will spend a little more time on the 4th of these tabs, which is the sourcing channel. The sourcing channel bit. The type of user is either you can have a corporate card or a personal card. That's fairly simple to understand. Again, proprietary versus co-branded. And RBL Zomato is like a co-branded card. Amazon, ICICI Bank is a co-branded card. Now, a lot of e-commerce, so a lot of commerce has shifted to the digital mode. You are unable to go out to the shop as frequently. There are a lot more restrictions around travel. And so a lot of end consumer journeys are now being fulfilled by cards with co-branded cards. So you have the likes of Amazon, ICICI, as I said, you have the likes of Zomato, RBL Bank, and then a plethora. Razorpay has come up with something called Razorpay X. So as I said, lots of activity happening in the co-branded space here. I'll briefly touch on banca versus open market when we go put later in the slides, but this is just to show that a card company, so an HDFC bank cards, the Regalia, Infinia will all be within this, right? The purposes will all be very different. The practitioners in the credit card industry, they believe that between 10 and 15 variants of a card is what you can manage. You cannot manage more than that, right? So you want to segment your customer base into maximum, say 10, 12, 15, and then have a separate value proposition for them. So Regalia for a certain type of card, for a certain type of customer, the Infinia for a separate type of customer, so the diners will be for a kind of customer. And so you're not wanting to do too much and you can't be doing too little. So there has to be a way that you can segment your customer base. Now, the proprietary cards, as I said, this is all pertaining to SBI Cards. When you start looking at other card issuers, these numbers and the classifications will appear very different. The plain vanilla flagship product for SBI Cards is the Simply Save product, right? Nearly 70% of their issuances are coming from this. And there is an annual fee on every one of these cards. Right? Now, what happens is, as I said, there is an annual fee on 95% of these cards. What really makes a difference is over a period of time, SBI Cards acquires customers in this segment predominantly, and then gradually upgrades them towards other categories which are higher paying. So then you start making higher annual fees. That's basically how you want to mature as a business. You want to go from low income customers to high income customers, from low paying customers to high paying customers. That's how you premiumize your product. And that is one of the ways that SBI Cards has been trying to do. There are obviously opportunities that we believe exist in the market where they could be segmenting this even more efficient. I did mention that we will talk about both again, banca versus open market. The reason for that is this. What you see on the top two charts is what they do every year, what SBI Cards did last year, financial year, and what they did in financial year 2017. You can see that the banca has gone from roughly 1/4 to half. Right? That's happened for a reason. I'll come to that. And what that has meant is the cards in force, which is the total stock of cards, which is now at close to about roughly about, say, 10, 11 million in the case of SBI Cards. And roughly about 1/3 of that is coming from the banca channel. Right? With every passing year, this mix is actually going up. So over a period of time, it won't be unimaginable that this mix could go towards a 40-60 or a much closer to 50-50, but maybe over 3-4 years. Right? That's how you should look at these businesses. You should broadly look at how much are they sourcing from within the bank channel and how much are they sourcing from the open market. And why does this difference, or why does this kind of distinction make any difference at all? It makes a very big difference in terms of your profitability engines. So you look at open market on the left, it's a high acquisition cost model. Right? When Amex sits at the airport, they have to pay the airport certain rental. On top of that, everybody at the airport will not become their customer in a hurry. Right? Most of us are either departing out or arriving in which case we are either rushing towards a flight or rushing back home. So generally, these acquisitions are extremely costly. when you go to the open market channel. The conversion rates are low and hence the acquisition costs are higher. When it comes to the banca channel costs are significantly lower. So in this case, in SBI Cards case, I think it's like a 2:1. But we don't know what that is for a lot of other banks. As I said, this number is hidden for most banks. The monthly spends in the banca channel, because the bank customer is generally a lot more conservative, they spend lesser. They also revolve lesser. What do I mean by revolve? That when they spend, they are largely transactors. Most of you CS will also be like that. 10-12,000 spend किया, 10-12,000 फिर अगले महीने 45 days के अंदर पे भी कर दिया ड्यू डेट के, right? And so there are low revolve rates in the banca channel. The open market by definition is a lot more higher. Delinquency levels, again, because between open market and banca channel is much lower on delinquency levels. So the loss rates are much lower for bank. So if you acquired someone through the bank channel, typically they are low acquisition cost and low delinquency cost. But your income is equally low, right? Net, your ROA can still be maybe 3.5%, 4.5% there, right? Open market, everything is high. Income is high, expense is high, and the ROA is again very similar to what you make on the banca channel. So net, you are making similar money, but the banca channel is your defensive bet. When times go really bad, that is the channel you need, right? That's what gets you stickiness, because that customer is not going anywhere. The open market is not your customer. Open market, आज की तारीख में, if you are spending money, if you are giving them treats, festive treats, cashbacks, they will spend money with you. And tomorrow, if another bank is willing to do that, they will go there, right? Because they are not your primary customer. The banca channel are largely your primary customer. So if I recall correctly, SBI Cards is about 38% in banca and about 62% here. Axis Bank is actually 97% banca. Right? HDFC Bank will be a very high 50%, 60% number as far as banca is concerned. ICICI Bank will be more than 80% when it comes to the banca channel. They are not very large in open market. So most of the other banks are not very large in the open market. SBI Cards is not a bank, and hence they are very large in open market. American Express, very large in open market. RBL Bank, large open market. Right? Because they don't have a network. SBI Cards does not have a network. SBI has that network. And so the banca channel is relatively smaller for these compared to an HDFC Bank, ICICI Bank, and Axis. But as I said, you can still build a high ROA business. You can still build towards a 4.5-5% ROA business. But in the tough times, you are better off having a defensive segment called banca, which can at least hold you in very good stead. So it's a very sticky business that comes to you, at least itna to aayega. Different ways to make money, as I said. There is a fairly high share of NIMs. NIMs are fairly strong for SBI Cards. They are at close to about 21% on average. This is what you make after interest expense, right? So right now, as I said, you should discount what has happened between April to September 2020. Do remember, we are in a very low interest rate mode right now. Banks, NBFCs, because of the kind of crisis we saw in FY19 and 20, banks and NBFCs have had fairly comfortable liquidity, fairly low interest rates. Right? And obviously, SBI Cards also tends to benefit. They are a very well-rated NBFC. They also stand to benefit during such times. Right? And so you can see that the NIMs have actually expanded overshot. But I'm saying cross cycle, it's still a 20% NIMs business. Very high share of fee income. So you make money on both float and fees. If you make money only on one, then you are in trouble. So as I said, if I have people on my cards base who are largely paying me on time, then I have a problem on hand. I have to figure out a way in which they should be able to, in which I should be able to get them to revolve a lot more frequently. And I'll tell you what revolve means. I'll just go through some of these slides very quickly. This is why SBI Cards commands the valuation that it does, right? You just look at what has happened in the bottom table here. it's a 4% to 6% kind of an ROA business. Right? I'm sorry. But more importantly, even while they have grown in scale, look at the profitability, the unit the profitability. That means on every card, what they make has actually gone up over time. Now, just imagine you are in business, and most of you are in businesses, right? When you run a business, every time you acquire customers, the averages actually tend to go down, right? Because everybody is not going to be a Virat Kohli, right? So when you add a Virat Kohli and a Shivam Dubey, the average will go down for the team. Right? Now, here is a business where the corporate is not only growing the top line, but also the money that they make on every single unit, right? And that's also growing. It's higher in FY20 than it was in FY17, right? Now that's a very big delta. So that means the multiplier at the bottom line is even more significant. So imagine if your top line is growing at say 25%, your bottom line is actually multiplying at 40% CAGR. Right? That's what that it tells you. A lot of it comes from how tightly you run operations. Obviously, there are tailwinds that come in from the corporate tax rate cut at times. At times, you have a very good year in terms of delinquencies and so on. But if you run a tight ship, this is a business where you can actually make more money by more money per customer. Right? So last year, if I was running a Kirana store and if I made say $50 per customer, am I making 40 rupees this year or am I making 60 rupees this year per customer? And so if I'm adding even 10 customers more, you can imagine what the profitability is. Right? And so this is the reason why SBI Cards commands that kind of valuation today. I mean, that's the reason why there has been so much excitement. That's been the reason for the over subscription that we saw in March earlier this year when it actually did step in for IPO. A lot of other banks, if they were to float their cards business separately, will then be able to see similar tailwinds when it comes to subscription. I think because it's an exciting space to be in. A lot of leading banks, I think the top 4 or 5 banks, you shouldn't be surprised if their economics is actually very similar. Just benchmarking with 2 other banks, which tend to give you some disclosures. As I said, this is a very neatly hidden segment in the banking portfolio. Not too many banks reveal a lot of things about where the credit cards business is, except SBI Cards, because they are now listed and they are a separate pure play business. So obviously you get very different level of disclosures there. We are not going to be making any investment calls. HDFC Bank remains a parent. So to that extent, we will never offer an investment view there. RBK is a part of our coverage universe. Both Darpin and I are happy to take any questions offline. And all of our research on RBL Bank is available in the public domain. This is just something more about the ROA and the ROE. These are 3 businesses, SBI Cards, Bajaj Finance, and HDFC Bank, which have been at the epicenter of the various businesses that they are in. So HDFC Bank among the banks is a bellwether stock. Bajaj Finance among NBFCs is a bellwether, and SBI Cards is a pure play very clearly. And so just to understand where the profitability metrics are for these bellwethers, I think this is a very good benchmarking exercise. Now this one is interesting because a lot of spend has now moved digital. As I said, a lot of commerce has moved to the online modes. A lot of spend has also moved to digital. You look at UPI. UPI is doing 21 trillion. That's 21 lakh crore. Right? Credit card spend that happens on the POS machine is actually higher than debit card spend that you're doing on the POS. Average ticket sizes. I did mention about the ticket sizes. Just look at this. Now people do ask कि credit card रहेगा या नहीं रहेगा, right? सब कुछ contactless हो गया, UPI आ गया, IMPS है और 2-4 मोड आ जाएंगे. Whether credit cards will survive, right? And I believe from a macro opportunity they will. And the reason I'm saying that is because of the ticket size difference that you see here. For large ticket transactions, I don't think you have too many alternatives today. If you were to go to a Chroma, you can't do UPI. You won't be doing a UPI. If you were to go and buy something on Amazon, very unlikely you're doing UPI too many transactions. Mobile खरीदना है, UPI नहीं होगा, right? So a lot of large ticket spend, high value spend, appliance spend, और आपके घर में अगर 4 appliance है, आप अगर 5वां ऐड करना चाहते हो, typically you will go to one of these large appliance stores, and you will not do a UPI there. You will either spend with a debit card or a credit card, or a lot of UCS will probably pay by cash. But now things are changing, I think. A lot of outliers aside, I think cash is reducing in the system. And because cash is reducing, it is moving to other alternative modes. Credit cards is an important mode that is surviving the test. Right? Obviously, UPI is a bit like ABD Villiers, right? So they are in a very different league altogether. I think there's a lot more happening with the NPCI's backing here. And it's extremely convenient. A lot of you must be using UPI for your P2P, P2M transactions as well. Right? But nobody's making money. That's the interesting part. Very few of them are making money today. Everyone is only interested in acquiring either merchant or customer. Right? They are not really interested in monetizing UPI today. And plus, if the merchant discount rate is very close to zero, there is very little you can make anyway. So the point I'm trying to make is the profitable pool. A profit pool in credit card is significantly greater than what it is in customer. What will survive? I think large ticket spends will largely be dominated by credit cards. That's how we tend to look at the overall digital channels or modes of payments that are currently available for individuals. Same credit cards are about 10% by volume, nearly 2x of that by value. A lot of that is higher ticket size, as I said, and that's just showing you in numbers how it has played out over the years. There are some, again, the global comparables for you as to how SBI Cards compares with other listed players who are in the credit card space. There aren't too many in India. As I said, there's only one of its kind, but there are others in the world, right? And some of these are headquartered in different countries. Synchrony is based out of the US, so is Capital One. Krung Thai is out of Thailand. So these are companies which are identified with being card companies, right? A predominant portfolio of theirs will be in cards. So this is just something of interest, something that you might find interesting. So very comparable on profitability, but very high on growth. So the difference between an SBI Cards and a Krung Thai card, right? If you look at ROAs and ROEs, they might be comparable. 20 ka 30 ban raha hai, theek hai. But look at growth. I think that's where most of the alpha comes from. If you look at the top line growth that is coming, spends and receivables, you can see SBI Cards, because it is India. As I said, if you are Virat Kohli, you have a different value because you're playing for India, right? If you were playing for Zimbabwe or West Indies, I don't think too many people will even look at you a second time. These are obviously risks to the investment call itself on credit cards. Whenever you evaluate anything in the cards business, you should also think about the potential risks that exist in this segment. There are obviously structural risks around innovative modes of payments. There's a regulatory risk because of MDR. The RBI is always trying to make it more customer friendly. Customer wants everything free. Given a choice, you and I will not pay for any transaction that we want to make, and yet the merchant has to earn their money, right? So that balance is what will play out, we believe, and that's a risk that you should keep in mind. Thank you. I'll just go to take you through a couple of things here. This is what you will find very interesting. This is a part of our annexure in the presentation. And what this means is if you are spending roughly 10,000 rupees, right? If you are a category A customer, you are a transactor. Basically, 10,000 spend kiya, 10,000 due date pe pay kar diya. Right? And hence, all that the bank makes or the issuer makes is an interchange fee. They make roughly 1.5%. यानी 100 रुपए पे 1.5 रुपए बना. That's all that they make. They don't make any float income out of you. No NII at all. 0% interest income. Because आपने overdue कुछ रहने नहीं दिया. 10,000 का 10,000 पूरा पे कर दिया. Now there is category B, which is या 5,000 मैंने ड्यू डेट के दिन दिया और 5,000 रोल ओवर किया. So I spend the same 10,000, but I pay only half of it on the due date. The remaining I roll over completely. Now this is generating a 40% interest rate, right? Nearly 36 to 42%. So very close to 40% is the price that you pay on what you roll over. Now, obviously, you as a consumer do not want to remain bedded in this, but this is very, very attractive for an issuer, right? If SBI Cards gets this kind of money, just imagine, right? Every customer is paying you on 50% of the outstanding, they are paying you nearly 40%, right? So that's a very, very sweet part of the business, but you don't want to overdo it, right? And hence there is a C, category C, which emerges, which is essentially EMI loans, right? So you pay partly on the due date. The remaining you tend to revolve, but revolve it as an EMI loan, a 6-month EMI loan, a no-cost EMI loan, etc. This is much lower on interest rate, anywhere from 14 to 20%. The interchange fee you will see is more or less the same in every single case, right? A bank, it does not matter to the bank whether you are paying on time, whether you are paying in EMI, whether you are a transactor, an EMI customer, or whether you are a revolver. At the end of the day, they will make the same fee income. What will change is what will they make on the interest income. That's the big difference that it boils down. So this is just giving you a very quick snapshot of where we are in terms of the total income, the various revenue streams. As I said, I wanted to touch upon this in one of my earlier slides. This is broadly it, right? You make interest income. Interest income is either on, so there is one category which is at 40% pricing, there is a 20% pricing, and there is a 0 pricing, right? Which is essentially you pay on time. Of course, if you withdraw cash, then it's something that the issuers will love, but you should avoid. As a credit card customer, you should use cash withdrawal only in the most emergent situation, only in the most urgent situations. Even there, you should avoid. I think you should think twice. It's almost like Test cricket. You win the toss, you bat first. If you are in doubt, you think twice, but still you bat first, right? So never withdraw cash on credit card. It's that's a waste of your money. That's one way to save money. Even if I'm not giving you direct ideas on how to make money, I can help you save money. Then there's the fee income, right? So you have annual subscription fees. As I said, we showed you a few slides there in terms of different categories: Simply Click, Simply Save, 500 rupiah, SBI Prime, SBI Elite at 3,000 and 5,000 bucks, and so on. So that's the annual subscription fees. There is a processing fees which is charged every time you convert a spend into an EMI loan. They charge something called processing fees. Now the MDR charges are what you make on a transaction. यानी HDFC बैंक ने दिवाली के टाइम पे आके आपको बोला कि आप 20,000 spend करेंगे तो इतना cashback, right? That's a way to get you to spend. But when you spend 20,000 bucks, HDFC bank makes money, right? If you are spending on Amazon, the Amazon banker also makes money. Visa and MasterCard also make money. This is how they make that money. Right? Anywhere from 100 रुपए के ट्रांजैक्शन पे 1.5 से लेके 2.5 रुपए तक इन लोगों में बढ़ता है. किस में बढ़ता है? स्विच, which is Visa, MasterCard, issuer जिसका कार्ड आप यूज कर रहे हो क्रोमा में जाके, and acquirer जिसका अकाउंट क्रोमा के पास पड़ा है. The consumer pays 100, the merchant receives only 97.76 in this illustrative example, right? बाकी का ₹2.25, 2.24 has been divided or distributed between issuer, switch, and acquiring. Right? At different points of time, different categories, this distribution will differ. कौन कितना पैसा बनाएगा depends on category, depends on the time, on the stage of the life cycle that you are in, right? So there will be times when Visa and MasterCard basically say, "Arey, COVID time hai, let's not push the credit card company too hard, because as it is, delinquencies are going to rise in this segment. So let's give them a little more, like a breathing space. So the switchers might be willing to take less money, right? But Visa and MasterCard play in this. American Express plays in all three, as both issuer and switch, actually. Right? So we are almost at the end. I just wanted to take one very quick minute and take you through, probably overshot, beyond 6:15. So anyway, very quick, put 1 minute overview on American Express India. This is Amex India, so there is a P&L available only for this. This is largely into 99%, 95% is credit card business. You saw SBI Cards is actually making more money per card. American Express is making 200 rupees per card, compared to SBI Cards, which is making about 1,000 rupees per card. That's largely because American Express makes a lot of other income, which is 10,000 rupees in MDR fees, this fees, that fees, joining fees. आपको free का card देता ही नहीं है. It's all aspirational. You are willing to pay for it if you are American Express customer. So they make a lot of fees, but they also spend for it. They don't get any free lunch, right? You can get people to spend only if you spend yourself. आप अगर धंधे में बैठे हो, अगर आप गल्ले में बैठे हो, तो आपके जैसे और भी 4 किराना स्टोर है, आप खर्चा करोगे तब आपके ग्राहक भी खर्चा करता है. So you make as much money as you are spending, so there is hardly any marginal contribution here, right? Net इसमें पैसा नहीं बन रहा है. पैसा कहाँ बनता है? NII में बनता है, which is why you don't want everybody to pay on time. You want a healthy mix of people in all three categories, A, B, and C. If you remember this particulars, you don't want everybody in category A. फिर तो आपका ROI नहीं बन रहा. Then you are in business for the wrong reason. I'll stop here. We can, between Darpin and myself, we are happy to take any questions that you may have. Happy to talk about frameworks and how you can make money from these businesses. A lot of these businesses are unlisted. As I said, we have not made any recommendations, but if there are investment frameworks that we can usefully talk about, happy to do that. I spoke for too long. I didn't keep track of time, but happy to open up for Q&A. Viral?
Yeah. Thank you, Mr. Krishnan. I think Veerav can take up few questions. Veerav, you can take up.
Yeah, sure. So we have a couple of few questions through YouTube, wherein I'll just take them up one by one. Firstly, we wanted to understand as to where SBI, Access, First Data, ICICI, HDFC Bank stand in the acquiring space.
Could you just repeat that if you don't mind?
Yeah, sure. The question is, where do SBI, Access, First Data, ICICI, HDFC Bank stand in acquiring space?
So you're basically talking about the merchant acquisition space,
Yeah.
which is the issuing, sorry, which is the acquiring side.
Yeah.
As I said, this is there again you find the likes of, I think SBI and HDFC Bank would be market leaders there. But the reason I'm not going to give you a pecking order is because every season has had a very different leader. Right? It's like asking you who is the best T20 batsman, right? IPL 2018 में आप different answer दोगे, IPL 2020 में आप different answer दोगे, but you know broadly who are the top 10 people. That composition does not change, right? All these large banks are fairly meaningful acquirers, but they are not in tier 2, tier 3 markets because it doesn't make sense. Merchant के पास कितना business होता है आपको पता ही नहीं चलता, right? So if you were to establish something in the physical mode, the banks have generally restricted themselves to urban and metro centers. There is very little penetration of merchants on the acquisition side for the large conventional banks, whether it is SBI, whether it is First Data, ICICI, Axis. I think Axis is fairly meaningful as well. So all these 4 banks will be touch and go. 19-20 का फर्क रहेगा, right?
Okay.
Yes Bank was fairly large as well, but the fintechs are much more active because they go to tier 3, tier 4 because उनका digital mode है, right? M-Swipe is with RBL Bank. Then, as I said, people are moving towards MPOS and SoftPOS, cash-free, Razorpay. These are all entities. I was very surprised for PhonePe. आपने PhonePe का QR code अगर roadside vendor के पास भी दिखेगा अंदर, right? Roadside vendor 500 रुपए देता है PhonePe every day. उसका rent है, right? So a small roadside vendor is paying a daily rental of 500 rupees to PhonePe. Can you imagine? पानी पूरी वाला PhonePe को 500 रुपए दे रहा है हर दिन का, उसका धंधा कितना हो रहा है दिन का, आप सोचो. Why is he paying 500 rupees to PhonePe? So I think they have not missed the bus, but I think they restricted themselves because of the physical mode. They didn't go they weren't innovative enough on the digital mode. And so the largest or the lion's share of activity levels on the acquiring side are happening by the fintechs, not too much from banks.
Okay. Thanks, Krishnan, for that. Now, since we were discussing something on fintech, in case of fintech companies, how are they earning as compared to the traditional card companies? If you can throw some light on their earnings as well.
So fintechs are a very large space, very, very large ecosystem, right? It starts from payments, it goes to lending. There are some, I mean, payments alone don't make money, right? So if I go here, I mean, I told you that payments are, I mean, there are business models around this, right? Payments. But if you were doing only payments, it's a very thin margin business, right? 1.5% is what you make. Right? You can imagine 100 रुपए के transaction पे आपको 1.5 रुपए ही बन रहा है. And gradually that 1.5 रुपया is under competitive pressure because it's a fragmented world. There are the likes of WhatsApp Pay that come in, they disrupt you for 6 months, right? So it's not an easy business where you can make money. So payments alone is not, is generally a loss leader. You are there to just acquire customers, right? WhatsApp Pay, आप लोगों ने पिछले हफ्ते, I think 8th of November is when they went live in India, right? I think they got the RBI approval to be able to start doing the UPI business. उससे UPI को कुछ फर्क नहीं पड़ा है. There are other channels, so obviously what will happen is within the pie, Google Pay का थोड़ा उनके पास जाएगा, Phone Pay का थोड़ा उनके पास चला जाएगा. So there will be always a bit of give and take as to who is spending more, who is marketing themselves better, etc., etc. But payments alone will not make money, right? WhatsApp is into the payments business not to make money from payments, but they want to do a lot more beyond payments. They will never be able to charge customers. If I told you as a customer, you have to pay me for an app, you will say, I don't want this app. Right? So I have to find a paying customer on the merchant side, which is this acquiring side. The merchant pays for everything. That Kirana store, that Amazon is what pays every time. Right? The seller on Amazon is paying. Right? The seller pays a part, and I think payments, as I said, is a commoditized business over a period of time. It's very difficult to make money purely on payments, which is why you see fintechs actually getting in. This is why you saw payment banks not necessarily maturing, right? They also want an exit. A Paytm payments bank. I mean, how many payment banks are actually making money today? Not too many. Most of the time, I think they want to load credit over and above that. आप payments कीजिए, उसके ऊपर मैं आपको credit देता हूँ, right? If you are a Chroma, you do payments, use my POS machine for the payments, but give me your data, right? आप daily का धंधा कितना करते हो, right? And that makes me help take some decisions as far as credit are concerned, right? The filters, again, the gating filters are fairly strong. The credit decisions are a lot easier because of the data that you have from the payments. So, which is why I said payments is very important. It is the glam quotient in this entire universe, but it's not the one that makes money. So credit cards are very different. As I said, credit cards have different ways to make money. You saw American Express. If you did only fees, there is very little scope for you to make high ROI. Fintechs there aren't too many mature fintechs in India today. You saw that here. Share of the profitable fintechs, right? In payments, you have about 1/4 of the fintechs that are actually profitable. Right? Most fintechs are not. Most fintechs have not even materially matured at this point of time.
That's a great in depth. You gave the response. Moving on, we have an online payment solutions company like Infibeam, which is also listed. So if you can throw some light on that too.
Specific stocks, I mean, as it is in this case, I think my understanding on Infibeam will also not be mature enough. And plus, even if I had known a little bit better about Infibeam, I don't think it would be fair for me to use this platform to answer that very stock specific. I think we'll probably leave that.
Okay. What do you mean by float income? Like you mentioned something on float income and the fee income. So what do you mean by float income?
Float income is what you make, or the spread. What we mean by float is usually so if money stays with you for 10 days, that's float. For 3 days also it's float. What do you make of that money? Right? आपके पास पैसा आता है और वो 3 दिन में, so I mean, margin money, for instance, is float.
The interest spread.
I mean, put CASA is float, right? So it's basically playing on the maturity mismatch. That's why it's called float. It floats. It doesn't stay with you forever. It floats in and floats out. But what we mean is interest income, NII.
Okay. So, Krishnan, there is something which is newly coming into picture, which is more of payment being made to the credit cards through apps like Cred. So, would you like to throw some light on that and their business model of Cred?
Yeah. So, very interesting. So this is all specific to SBI Cards. Okay. Now, because SBI Cards, these numbers are historical. This is in the public domain. You can always go and cross-check this. We are not giving any opinions on where this is moving. So I would urge you to look at the bottom right chart. The bottom right chart here is essentially a breakup of this fee income, the 50% fee income that you're seeing. Right? This is a breakup of that fee. 50% of that is coming from transactions, basically spends. आप spend करते हो 20,000 रुपए का मोबाइल खरीदते हैं, तो उस पे जो MDR बनता है, that makes up a part of my fee. Right? The joining fees that you charge me is a part of that fee. And then there is this blue, right, which is nearly 30%, 25 to 30% number across time. पिछले 5 साल में, right? In the last 4 or 5 years, you have earned anywhere from 25 to 30% from this blue. This blue is nothing but instance. That instance is every time 4th of December is my due date, but I'm paying on 6th, I'm getting charged. I pay a late fee, 100 rupees. Right? That goes into this blue, this line, right? Instance is also about withdrawing cash. As I said, withdrawing cash is probably one thing you should avoid at any cost, because you are unnecessarily paying 30%. You might as well borrow from a friend, family, whatever it is, but don't pay 30% on cash withdrawals from a credit card. Right? That comes in this in this number, right? So 30% of this 47 or 50% is actually being made, or 25 to 30% is actually coming from late fees. That's lazy money that's being made by all the credit card issuers. Just because मैंने 4 तारीख को pay नहीं किया, 6 तारीख को. In some cases, obviously, if it is a bank, it can get waived off because, I mean, हो सकता है कोई अगर बैंक है, I don't want to take names, but I'm saying अगर बैंक, अगर आपके पास उसी बैंक का सेविंग्स अकाउंट भी है और आप लोग तो सीए भी है, तो आपका करंट अकाउंट भी है, राइट? तो हो सकता है बैंक एज ए टोटल रिलेशनशिप वैल्यू मेंटेन करने के लिए आपको वेवर दे देगा, 100 रुपए, ठीक है, माफ किए, राइट? बट जनरली दे मेक अ लॉट ऑफ मनी ऑन दिस लाइट ब्लू. This is where credit has come in and disrupted it. Because if you keep giving people reminders and allow them to pay on time, right, the chances are this fee income could come under pressure. Because there is no lazy money to be made. There is no easy money to be made. ऐसे ऐसे करके आपको 10-20 करोड़ नहीं बनने वाला. So I think credit disrupting this. Having said that, as I said, as I also mentioned in the later part of the slide, there are key risks to almost every element of business. आप किराना स्टोर पे भी बैठे हैं, even then there are risks. आप सुपरमार्केट में भी हैं तो भी there is a risk. ऑफलाइन है तो ऑनलाइन का रिस्क है, ऑनलाइन है तो किसी और चीज का रिस्क है. So I think fintechs are there to essentially provide very convenient, or say for them customer convenience is very crucial, so that at the click of a button, at the snap of a finger, you can do a lot of things sitting at home. So they are going to be disruptive of other modes of making money, and the smarter companies will find ways to be able to offset that. But if you're asking specifically about cred operates in this light blue.
Okay. Thanks, Krishnan, for this insights and for this Q&A. Actually, we are well short of time now, and there are questions which keep on coming, and there are lots more to explore in this field. I am pretty much sure that our viewers and have got a very detailed information on how and where does this card and this fintech particular companies and the corporates are dealing with, and how they are earning, and what's their entire background. I'm sure this will help a great way to have people on board and learn through this training. I'm on behalf of CVOCA Association, I would like to give you a hearty vote of thanks for sharing your information and for giving your inputs and devoting your entire time on this. Thank you, Krishnan, and thank you to your team as well, Dipin and Puneet.
For formal vote of thanks, I'll request Viral to please take it.
Yeah. Thank you, sir, for your very insightful presentation. Payment industry has witnessed monumental revolution in last 2 to 3 years. We are in an era where we are gradually moving away from cash payments and inclining more towards online payments mode. And therefore, cards and payment space is a new hot cake. Mr. Krishnan, through his in-depth research analysis, took us through the nitty-gritties of cards and payment space. He explained us various business models prevalent in this space on both issuing side and acquiring side. He also made us understand various how these companies make payment money. We all will agree that this was a very intriguing and interesting session. On behalf of CVO Chartered and Cost Accountants Association, I thank you very much for sparing your valuable time. And I would request everyone to give a huge, loud virtual applause to you and your team, Mr. Krishnan. Thank you, sir.
Thank you very much. It was a pleasure. Many thanks to
Darpin Krishnan ji. Thanks a lot.
Thank you very much. Thank you very much
Thank you,
to both
Puneet.
Darpin and Puneet as well. Yeah. Thanks a lot.
Thank you.
And thanks a lot to the CVOCA for this opportunity. We hope to be able to do a lot more.
We'll be eager to for some other IPO of credit card now. We'll be desperately waiting for some other now credit card. Thanks for the detailed analysis. Thank you.
Thanks a lot. Thanks.